Good evening, everybody. Kamari Ellis here. Welcome to the Finance Rebel Show. Everybody is panicking. Everybody's panicking. Everybody is saying the sky is falling. Why? Because the coronavirus has attacked Wall Street. Dow Jones fell over 1,000 points today. And I got a lot of interesting text messages, DMs. I said DMs, right? Text inboxes, every platform. Somebody was asking about me, about my thoughts about the stock market, because everybody knows when I do tax, I love the stock market. So I am broadcasting tonight, doing my usual two-step on IG, YouTube, Facebook, the whole nine. Again, if you guys enjoy my programming, I encourage you all to share, spread the news, spread the joy, spread the knowledge, so we can help each other all rise up as we improve our financial IQ. The whole point of the Financial Rebel Show is to increase our financial IQ. I gotta say, what's up to Sunny Speaks. She's deemed me a deity. She's deemed me a god. She called me Tax Black Jesus. She called me the tax god the other day. She knows how to make my day. She's funny as heck. So all y'all go follow Sunny Speaks. Because that lady, one, she can cook. She's a vegan. She cooks her own meals, but she's hilarious. She needs to be up on somebody's stage. But again, coronavirus attacks Wall Street. Dow Jones falls over 1,000 points, right? So y'all probably thinking, wow, 1,000 points, that's a whole lot. It's not really. It's a little over 3%. But that's not to say that it's not a bad thing. All right. So when we talk about the coronavirus and we talk about this 1,000-point fall, right? We talk about the Dow Jones. Let's talk about what is the Dow Jones, right? So the Dow Jones Industrial Average is what you probably hear on news. They talk about it a lot. It's an average that started back in like the 1880s, 1870s. They use it as a gauge to track the economy. They gathered up all these companies and they tracked them to try to give themselves a better idea of how the overall economy was going. And then they started announcing it every night in the news, and we have what we have now. And so today what we have is we have about 30 companies, well, not about, we have 30 companies in the Dow Jones average. You can look that up by typing in Dow 30 or DJIA. You have companies like Home Depot, IBM, Microsoft is now in the Dow Jones Industrial. Before, it was literally only for industrial type companies, railroads, companies like GE or General Electric. They had so many problems. They got delisted, so they're no longer on the Dow Jones. But all of those companies fell. All right. And so we had a really, really interesting day. So I want to just walk through some of the stuff that went on in the market today, and how it's affected and what you can do about it. Now, it looks like all the major sectors got impacted, from utilities to consumer staples to industrials, to healthcare, financials, technology, and energy. Energy got hit the most. Energy fell about 4.6% today. Nice big drop. Guess what? Not only did not only did energy fall, oil fell. The oil prices fell today. Many people are feeling that the demand for oil, basically people aren't going to be traveling, right? So what's oil used a lot in? Oil is refined and turned into gasoline and kerosene or jet fuel. So jet fuel, also car fuel, diesel, gasoline. And they're feeling that with this overall coronavirus, it's going to slow down travel. One of the industries that got hit really, really hard today was travel, especially cruise lines. They got mollywopped. They fell off a cliff. So a lot of people are pulling back from those. But, a lot of times we have many of these corrections. They happen often. People panic. Now, Warren Buffett, one of my most favorite investors ever, talked about it today, and he said he wouldn't worry about it. Right. And what is his favorite term, or one of his most known terms? And I don't even know if it's Warren's, but it's attributed to him a lot. He says, you want to buy stocks when there's blood on the street. Well, today there was a lot of blood on the street because a lot of people got knocked out. I don't know if any of y'all are Friday fans, but I'm thinking about Smokey right now, but I'm not going to say it. But the market got knocked out today. But here's the thing. It's not that big of a deal. Some of y'all might be shocked that I'm saying that. But here's a term. So today is Monday. We can call it Black Monday. Black Monday 2020. But guess what? There was another Black Monday in 1987. That was the biggest Black Monday. That Black Monday, the stock market fell by over 22%. Again, stock market fell in October on a Monday in 1987 by over 22%. And so today, the stock market fell roughly by 3%. So when you put those things in contrast and comparison, and you look at it and say, hey, this really isn't that bad. But, when you're into the markets as much as I am, I'm also into the history of the market as well. It's very, very important. You can look at another very, very crazy incident, right? Everybody still references the Great Recession. Some folks who are on today might not remember it. You might be a little too young to remember it, but that happened. That started in 2007, ended in 2009. Now, the market started to fall, and I want to say November of 07. Had a big fall off the cliff in October of 08. And guess what? In March of 09, the trend reversed. I say all that to say that matter of fact, let me back up, with Black Monday that happened in October of 1987, that trend reversed, that negative trend, that downward trend reversed itself about in February of 88. So it was only a couple of months. So what happens is when you have these large extremes, these big falls, these just sudden drops, like when you see the market fall with no parachute and just crashes and burns, it usually gets up, dusts itself off, and starts to fly again. Now, it might not fly straight up. It might not fly to the moon or reach for the sun right away, but it starts to escalate again. Why? Because the stock market is a perfect reflection of human emotion. I tell people that all the time. And some of the biggest human emotions are fear and greed. And so today, what you saw was a massive amount of fear that came into the market. But guess what? In 87, when the market dropped by 22%, that was a massive amount of fear as well. And nobody could really attribute it to anything, any one particular thing in 87. It's kind of, they're attributed to coronavirus, but it's also a lot of other things, right? For example, the stock market just hit an all-time high. It's now down by about 5%. So you have a culmination of stock market hitting an all-time high, coronavirus, people seeing this all-time high, and they're saying, is a recession going to come? And they're saying, maybe I should take some profits. Is it time to take profits, right? You can't get any money out of the stock market until you sell something, win or lose. All right. That's the only way. You have to sell something. So in order to do that, you got to sell. And you usually want to sell when your positions are profitable. So there's a lot of positions that were profitable that people wanted to take advantage of and take a little bit of money off the table, right? So like I said, stocks were down, oil was down, but guess what was up? Gold. Gold was up today, and I know all my gold bug buddies out there are ready to dig their heels in because I always poke fun at them because they love gold. But gold was up. Gold actually hit a pretty decent high, a pretty decent high from a while ago. I'm actually thinking after this gets over with, all this scare, price of gold is going to fall. That's a potential money-making opportunity. Also, so gold falls. Not sure about oil yet, though. Oil's been in this funky place for a couple of years now. We got a lot of alternative energy sources coming on. Alternative energy is getting a lot cheaper, a lot easier for the average everyday people to get close to actually use in their homes and in their cars. So that's going to continue to be the trend, I believe, for quite some time. So we will see we will see oil. It may go up a little bit over some scares, maybe over some war scares or some geopolitical scares. but I don't see oil eclipsing $100 a barrel anytime soon. Today, I think it was at like 55 something. I don't really see it going back up above 90. I said 100 a minute ago, but even above 90 anytime soon. So that's good for the average everyday driver, right? Now, why don't I care about the market falling by 1,000 points today? Because when I get on here and when I talk about investments in the public space, I only talk about investments in stock from a long-term perspective. Long-term. Why long-term? Because the majority of my audience are not pros. They're not super experienced. They're not sophisticated investors at this point. To me, those are the folks who trade and do all the fancy stuff with the options. I can do that too, but my goal, my passion is to get more people into the market. So I try to make it as easy as possible. And so the reason why I don't care is because as long as you are investing from a long-term perspective and you are buying good companies, you're fine. Just because of coronavirus today, people got spooked doesn't mean the companies that I talk about investing in aren't going to make any more money. When you look at Starbucks, right? So I shared that I got a 5-cent dividend, right? Big Daddy Warbucks over here, ladies and gentlemen. I'm clocking all the dollars, 5 cents. But guess what? That's a great start, right? Because that 5 cents is going to turn into 10. And then that 10 cents is going to turn to 20. But guess what? Starbucks isn't not going to sell coffee because of the coronaviruses. Now, some of their China retail locations may get hit hard, but overall, the majority of their money comes from the U.S., where I'm going to shop. And many, many millions of others are going to shop. So the majority of their business will not be interrupted at all. So, you got to think about those things. You got to think about the business. You want to better know your business. As you all know, I broadcast live on IG, on Facebook, and on YouTube. And I want to shout out the Kaizen Investor because she asked me about annual reports. Now, she asked me about annual reports because what I said was the reason why I love the stock market is because it's the highest level of business. And I love business, right? But it's the highest level of business that you can see conducted anywhere, right? There's nothing wrong with the mom and pop shops in the neighborhood and the bodegas in the corner. But with the stock market, everybody has access to great business strategies that are being performed by companies like a Target, like a GE, like a Nike, all of those. So if you are a sneakerhead, it will behoove you to read Nike's annual report. Now, the markets aren't exactly the same. There's some different dynamics, but you can start building out some strategies and predicting some things about what's going to happen to the sneaker market just by following the giant Nike. It will give you some insights. So the Kaizen Investor, and everybody go follow her. She's on IG and on YouTube. She said, wow, I didn't know you could read the annual report. Absolutely. She was interested in Target. All you got to do is go to target.com, go to the investor relations section on their website and look at their annual report. And in that annual report, again, it's going to lay out what the company is thinking about, what the executives are thinking about, how they're going to go about executing that, and what potential risk they may be having as well. So if you're really serious about getting into business, I would suggest, or if you are in business, I would suggest you go read the annual report of a company that is very related to the industry that you're in. You see, I have my Philly Tax Team shirt on. Guess whose annual report I read? H&R Blocks. Yes, indeed. Yes, I do. I know what their average pricing is. I know how many, roughly, I know how many stores they have. Roughly, I look at what they're doing. By the way, they've got phenomenal marketing, phenomenal social media. This isn't by no way and a commercial for them, but I am acknowledging that they've got a well-oiled machine. They make about $2 billion a year. They've got a well-oiled machine. So if I want to try to give myself a leg up on this well-run business, right? I'm going somewhere with all those folks, all right? So if I want to give myself a leg up, I don't want to read their annual report. I want to study them. Not that I like their practices or endorse their practices, but I can separate the value of their business versus the value of, or lack there, the value of some of their ethics. And I'm not going to go too deep with that, but you can all Google them and Google some of the lawsuits that they've had over the years. All right. So again, I say all that to say, I'm not worried about the coronavirus because people are still going to come get their taxes. They're going to come to me and get their taxes done. By the way, if you need your taxes done, phillytaxteam.com. I just got a new website, or you can text me at 484-278-1357 if anybody needs their taxes done. But the coronavirus isn't going to stop that. The coronavirus is going to be a blip. It's sad that people are going to get sick in this supposedly new virus that just appeared in this particular strand. I know it was around before, but supposedly this is a new strand. So all of that is going to be sad. However, as it relates to the stock market, it's not going to stop the business. It's not going to stop the money. It's not going to stop the customers from coming into the doors or calling the phones of these well-established businesses that are well-run companies. So keep looking at the market. Today was a great day to buy. Everybody should have had their shopping list together to go shopping because everything was on sale. Like I said, tech was on sale. Do you think Apple is going to go out of business? I venture not. Do you think IBM is going to go out of business? Let's just look at some of these real quick. All right. Do you think, let me see. Give me 1 second. Pulling up some of the holdings, some of the larger holdings. So you got the likes of Apple, the likes of Microsoft, Cisco. Do you think these companies are going to stop doing business because of the coronavirus? Well, think about that, right? Microsoft is just about every corporation. The large amount of money that Microsoft makes is from licensing, their desktop software, their office software. They're not going to stop doing business, and they get that money like clockwork. They're usually all tied up in annual contracts. It's another good business. Do you think people are going to stop going to McDonald's? Not so much. So again, today should have been a good day to go shopping. Now, in the investing world, in the stock market world, when we talk about a shopping list, what we call that is a watch list. So everybody should have a watch list. If you are serious about the markets, you should have a watch list. What is a watch list? A watch list is just a listing of companies that you think are interesting, but you're not quite ready to pull the trigger on. And so you want to watch them. You know, one of the trades that got me kind of popular on Instagram, like mini popular on Instagram, was the Tilray trade that I did a couple of years ago after it IPO'd. So Tilray was on my watch list. It's actually still on my watch list now, but it was on my watch list. And so I wound up buying it, I want to say in August of 2008. And if anybody remembers the story, it was trading around 23, ran up to 300 and then dropped back down to 100. And then now it's like 17. But guess what? I sold a large portion of my Tilray, right? But Tilray is still on my watch list to this day. Another company that's on my watch list is Apple. Another company that's on my watch list right now and here is, because I promised some people to talk about some of my favorite dividend stocks. So the one I'll talk about today is Starwood, STWD. STWD is on my watch list. It's a dividend stock. It pays an amazing dividend. It's the world's largest mortgage REIT. And what is a REIT? A REIT, R-E-I-T, is a real estate investment trust. All right. It's relatively priced and it pays a great dividend. I want to say it is, I'll tell you what the dividend is shortly. It's 25, close at 25.60 today. I'm definitely thinking about buying some more of that. The dividend yield is 7.5%. Now, as I'm saying that, remember these lives, these broadcasts are for educational and entertainment purposes only. Again, educational and entertainment purposes only. Before you buy any investments, please check in with your investment and tax advisor. Past performance is not an indication of future results. Okay. So now that that's out the way, I don't want anybody saying I'm going to sue Kamari because the stock did terribly. There's a lot of factors that go into investing, but that's one. Start researching it, put it on your watch list. So have a watch list, right? When these big events happen, be ready to pull a trigger. Have some cash on hand, because when you have cash, I don't care if it's a stock market, I don't care if it's personally, I don't care if it's business wise, you always have opportunities. I hate to say it, but where I'm from, the community where I'm from, if you have cash, you get just about getting anything, and there's always a deal. Go to the barbershop, go to the hair salon, you will find a deal, and if you have the cash, you can take advantage of it. I'm not going to say too much more on that, but for those who know what I'm talking about. All right. So today, the coronavirus, not super duper concerned about it. Could it be a trigger for a further fall? Maybe that is always a possibility. And so what do I say towards that? Because I get the question a lot of times, what should I do when the next recession hits? Well, when the next recession hits, you should already be prepared for the recession, right? And as we talk about the stock market, your asset allocation, basically the way you kind of line up your stocks, the type of assets they are, whether it be stocks, real estate, cash, a business, should already kind of be in place before the recession comes. And so one of the things I always tell people, because we are in love with credit, right? We don't like to save. But I say stack your cash. Stack your cash, pay down your debt. Two things everybody should be focused on right now. ASAP, stack your cash, pay down your debt. Look to build up your income sources and strengthen your income sources. So if you just have a job and you're not steady about that, then start a side hustle. Don't be whimsical about it, right? Because I see people jump from side hustle to side hustle to side hustle, get into something, make a decision to stay into it, and really see if it's for you. But a lot of times people just kind of get in and they say, I tried it for 3 months and I didn't make any money. I mean, I've literally had people tell me that. It makes me furious, but I get it. They tried something. We live in a microwave economy. Everything's about instant gratification. And so they wanted it to pop like that, and it didn't work. So, be committed, folks. Be committed, be focused. All right. So I'm going to take a couple of questions. I see I got some commentary, and I think I have some questions. I see I got some questions in my IG. All right. Oh, so guys, I'm watching on YouTube as well. So thank you for watching. Thank you for watching, everybody. Chili Davis says I need to hit 70. Are you talking about oil? You need that to hit 70. Miss Williams, how are you? What does the coronavirus have to do with the stock market? Okay. So the coronavirus has a lot to do with the stock market today. For a lot of reasons, right? There's a lot of companies that are operating in China, where it was kind of ground zero for the coronavirus. And so a lot of those people are not going to be able to continuing manufacturing their products or delivering services. Matter of fact, I have a client right now that buys direct from China, and they cannot buy direct from China right now. So it's hindering their business just a little bit. And it's because of the coronavirus. And so everybody, again, remember, the stock market is just a collection of businesses, of publicly traded businesses. All right. I think a lot of times we miss that, right? We hear stock, but we don't take it a step back, right? What is a stock? A stock is just a ownership share in a corporation. What is a corporation? It's a business. All right. All right, Chili chimed in again. When heavy swing in January, be ready to swing down. Maybe. I mean, listen, they have been talking about a recession since 2009, since the last end of the last recession. And we see where we're at now. How you doing, Nina Collins from Instagram? Chili says time to buy defensive stocks. Possibly. I don't know if the economy is still doing relatively well. I don't want to talk too much about that because that's going to lead me into political talk, and I'm trying to take a political diet right now. So I'm just going through the comments. Great info. Latia Parker says, I took some hard hits today. However, I purchased more as price dropped. All right. That's what you do. That's how you thug that out. Latia, what did you buy? I'm really interested. What did you buy? That is exactly what you're supposed to do. I can't tell you how proud I am of you. Actually, today has been a good day for me. Like, I love hearing people say that they're in the markets. I got a call from a police officer who needs some help with a Roth IRA, doing a backdoor Roth IRA, and he's about that stock market life. And I said, wow, I'm shocked because all of the policemen I know, well, not all, the large majority of policemen I know, large majority of the firefighters I know, because I have a lot of friends and clients who are police and fire, or have had friends and clients who were police and fire over the years. They're usually not about that life. If they do anything, they are about real estate, but they're usually not about the stock market. Okay, so good. So Chili says revenue, balance sheet, debt, viable services, billions in bank. Yes, Apple. Yes, Apple does over $1 billion a month in cash flow. All right, so that's after all the bills are paid, all the products are brought. After everything's done, they got over $1 billion in cash going into their bank account. So Stacy, you asked the question about STWD. Yes, it's one of my favorite dividend stocks. It's not a recommendation. I'm just telling y'all how I feel. All right? Just telling y'all how I see it. And I've been rocking with that for quite some time. All right, folks, let me know. We're going to get back in tune on this. It's tax season, so I've been a bit busy, but we're going to get into, and I'm committed to being here. And so, coronavirus, Black Monday 2020. But guess what? Again, the markets usually always bounce. The markets are probably the greatest investment / wealth tool ever committed outside of life insurance. Life insurance to me is probably the greatest financial tool ever created. But second to life insurance, I would say the stock market. All right, we're not going to argue today, though, folks. I'm just telling you my opinion. All right. So again, if you have any questions, I'm here. I'm getting back to the swing of things. Wednesday will continue to be the Ask Amari Day. That'll be the day. Everybody, I'll be answering everybody's question. We'll get back into the swing of that this Wednesday. So stay tuned. If you have any questions, you could always inbox or DM me, text me. If you text me, do ask #AskAmari, and just let me know that you have a question. And I will answer it during the Ask Amari segment, which will be this Wednesday at 7 p.m. I'm getting together, folks. I had a little flood, but now I'm back. All right. So thank you all for watching the Finance Rebel Show. I'll be back tomorrow. Not sure what time, but I'll be back. We'll talk some more stocks, talk some tax, and we'll keep talking about wealth and raising everybody's financial IQ. All right, folks. Everybody have a great night. I'll see you all soon.